What if I told you the greatest financial scam of the 21st century wasn't engineered by a criminal mastermind, a corrupt government, or a shadowy corporation, but by ordinary people, fueled by hype, hope, and blind belief? What if the real danger wasn't that crypto could fail, but that we never questioned it until it was too late? Imagine waking up one morning to discover that the future of money, the digital gold everyone swore would reshape civilization, had evaporated overnight. Not because the technology died, but because the trust holding it together collapsed instantly. Billions gone, faith shattered, and yet most people still don't understand how it happened. Today, we're pulling back the curtain on a story sold as a revolution but built like a trap. A story that begins with world-changing promises, swells into global mania, and leaves us with an unsettling question: was crypto truly innovation, or the world's greatest scam? To understand the truth, we need to return to an era of outrage, the years after the 2008 financial crisis. Trust in banks was destroyed. People felt deceived by the system. So when an anonymous figure named Satoshi Nakamoto released a 9-page white paper arguing for decentralized digital money controlled by the people, not by institutions, it felt like salvation. No middlemen, no hidden corruption, full transparency. But here's the part rarely discussed: the dream of decentralization would soon collide with human greed, marketing manipulation, and a global marketplace that rewards speculation over integrity. In the early days, crypto wasn't a scam at all, it was a rebellion. It attracted idealists, programmers, and privacy activists who believed in sovereignty and freedom. Bitcoin itself was slow, impractical, and limited, but it represented hope. Then something subtle but dangerous happened. Crypto transformed from a philosophy into a commodity. The moment early investors realized they could profit simply by convincing others to join, the narrative changed. Bitcoin's scarcity, capped at 21 million coins, was marketed as digital gold, and the value shifted from what it could do to what people believed it might be worth. As Bitcoin climbed from $1,000 to $10,000 to nearly $70,000, FOMO took over. Suddenly, everyone from celebrities to influencers to teenagers wanted in. Exchanges appeared overnight. Thousands of new tokens launched, many promising the next big thing. Crypto wasn't being used. It was being gambled on. At the heart of it all was a dangerous assumption: as long as everyone believes, the system will survive. But belief is fragile, and once it cracks, everything collapses. The breaking point wasn't a single disaster, but a cascade: ICO scams pulling in billions for projects that never produced anything, major exchange hacks like EMT, GOX, and QuadraGax, and finally the catastrophic implosion of Terra or Luna, which vaporized $40 billion in days. That collapse triggered a domino effect that toppled hedge funds, lending platforms, and eventually the world's second-largest crypto exchange, FTX, revealing an industry built on leverage, illusion, and unchecked greed. When millions of investors tried withdrawing funds, many discovered the horrifying truth: exchanges didn't actually hold their money. Funds had been mismanaged, loaned out recklessly, or used to pump token prices. Regulators arrived late, lawsuits piled up, and ordinary people who entered the market believing they were investing in the future lost life savings. Even now, most collapsed projects have never repaid victims. Each disaster brought promises of reform, better audits, proof of reserves, decentralized governance, but none addressed the core flaw: crypto's value is driven not by utility but by belief. And belief is the weakest foundation any financial system can have. History proves this. Crypto follows the same pattern as every major bubble: tulip mania, the South Sea bubble, the dot-com collapse. Real innovation twisted into mass speculation. Today, over 22,000 cryptocurrencies exist, but fewer than 1% solve any real-world problem. Rug pulls, pump and dumps, and hacked projects have drained tens of billions, and the pattern repeats weekly. The parallels are unmistakable. So what can we learn? First, groundbreaking technology can coexist with a corrupt marketplace. Crypto's ideas are powerful, but speculation overshadowed innovation. Second, when belief not utility drives value, collapse is unavoidable. Third, the greatest danger isn't losing money. It's failing to learn the lesson. Bubbles don't disappear, they reinvent themselves. So was crypto truly the world's greatest scam, or was it a mirror reflecting our obsession with shortcuts and instant wealth? Maybe the real question isn't whether crypto failed us, but whether we failed to understand it. If you want more deep dives that challenge the story you've been told, make sure to like, subscribe, and hit the bell because there's a lot more to uncover.